Welcome to your focused analysis of today's Luxembourg Intelligence. We've gone through the latest updates to bring you the insights that matter for your work in law, finance, directorship, compliance, and company secretarial roles.
And our mission today, Friday, May 9th, 2025, is really to pull out the key developments. We're talking regulatory shifts, economic tweaks, administrative updates, all drawn from official Luxembourg sources and reputable financial news.
Okay, let's dive in. First up, Europe Day. Luxembourg's quite active, celebrating the 75th anniversary of the Schuman Declaration. We're seeing events like the Europa Experience Anniversary, an open house in Schengen.
Right, and these really underline Luxembourg's deep commitment to the whole European project. But maybe more relevant for our listeners is how this plays out diplomatically.
Such as?
Well, looking just ahead, May 14th, Luxembourg is hosting the 134th annual meeting of the Council of Europe's Committee of Ministers. They'll be tackling some crucial European issues. It really puts Luxembourg at the center of things.
It's not just talk, right? There's a specific legal angle, too.
Exactly. The day before May 13th, the Council of Europe Convention on Protecting the Profession of Lawyer opens for signature. So a real push on the legal framework side.
Practical consequence.
Security. There's a ministerial regulation out, Memorial A178, banning drone flights in Luxembourg City and Esch-sur-Alzette on the 13th and 14th. Makes sense with these high-profile events.
Okay. Shifting gears to the economy. Something hitting businesses directly, indexation.
Yes, that kicked in May 1st, a mandatory 2.5% bump in gross salaries and pensions under Luxembourg law. This followed the April Consumer Price Index confirmation.
And the key takeaway for businesses?
It's a direct impact on labor costs. Good for purchasing power, no doubt, but it does mean, higher operational expenses for employers, something to factor in.
Got it. Now let's look at the regulatory scene, financial and legal services, starting with DORA Day. There's an extension.
That's right. The deadline for financial entities to get their corrected DORA information registers submitted via the eDesk portal that's been pushed to May 31st.
Why the delay?
Seems there were some technical validation checks flagged by the European supervisory authorities. So the CSSF granted more time. They're also updating their DORA guidelines alongside this. It gives you a bit more breathing room for accurate reporting on your IT resilience.
And the CSSF isn't just looking at current compliance, but future tech, too. AI.
Yes, this is quite interesting. They've partnered with Clarence, that's a sovereign cloud provider, to explore using artificial intelligence, specifically for analyzing sensitive data.
When did this start?
Pilot projects kicked off in Q1 this year. It suggests, a potential shift towards more innovative regulatory oversight down the line. How they supervise might change.
Staying with market evolution. T+1 settlement.
Yeah, the CSSF is basically telling financial firms to get ready, prepare for a possible EU-wide move to T+1 settlement. ESMA put out a report on this.
Remind us, T+1 means?
Settling trades one business day after execution. The idea is to cut risk, boost efficiency in the system.
Okay. And Luxembourg's private equity sector?
Still growing. Oh, absolutely. Still expanding. We're seeing high demand for skilled people. And interestingly, a shift towards more front office type roles actually being based here in Luxembourg.
And education keeps pace.
The LPEA Academy is crucial there. They just had a legal academy module, for example. It's about providing that continuous learning needed for the sector's growth.
We're also seeing moves within the big law firms.
Yes, a couple of notable appointments, both effective May 1st. DLA Piper Luxembourg appointed Melody Bruneau, their first partner, focused solely on corporate M&A.
And Clifford Chance.
They appointed 5 new counsel, spread across their global financial markets and investment funds practices. It definitely signals strategic investment in that specialized expertise.
Right, let's drill down into investment funds. The regulatory side seems active, especially around MiCA.
Extremely active. End of April, the CSSF released a whole batch of circulars, 25885 right through to 25890, basically implementing EBA and ESMA guidelines to get MiCA operational.
What do these cover? Sounds like a lot.
It is. Covers things like supervisory duties, how to classify crypto assets, are they financial instruments, rules for dealing with third country clients, procedures for crypto transfer services, security standards, even templates for explanations you might need to give the CSSF.
So immediate homework for firms.
Definitely. Creates immediate compliance workload for financial entities and CSPs, the crypto asset service providers.
And ESMA itself, the EU body, is busy too.
Very. Recent stuff includes advice on the Listing Act that aims to simplify listing rules. There's a consultation out on ESG rating providers. They've issued guidelines on MiCA market abuse, rules on liquidity management tools for UCITS and AIFs.
Anything else coming up?
Yep, an ESMA webinar on data quality May 15th, a consultation on EMR clearing thresholds, deadline June 16th, and looking ahead to 2025, a common supervisory action focused on compliance and internal audit functions at UCI's, MANCOs, and AIFMs. Busy times.
What's the picture for the Luxembourg fund market overall? The UCI market snapshot.
End of March, figures showed total net assets dipped slightly by about 3.48%, down to EUR 5.75 trillion. Mainly due to negative market movements kind of outweighing the positive net inflows.
Any bright spots?
Interestingly, yeah, equity UCIs actually saw positive net inflows despite the overall market drop.
And the LPEA, the Private Equity Association, what insights are they sharing?
They've put out some useful stuff recently. One piece looked at listing funds on the Lux Stock Exchange as a way to raise capital. Another was a guide for U.S. managers trying to fundraise in Europe.
And sentiment in venture capital?
Seeing positive signs of recovery in the European VC space this year, LPEA points to AI, fintech, and secondary markets as key drivers for that growth.
Okay, let's switch lanes to corporate law and governance. There's an important RCS deadline coming up, isn't there?
Yes, absolutely critical. Individuals registered with the RCS, the Trade and Companies Register, need to update their Luxembourg National Identification Number, their LNI. Deadline is May 31st, 2025.
And it's free until then.
Free until May 31st. After that, a fee applies. But more importantly, if you don't update it, you risk having your access restricted for RCS filings starting October 1st, 2025. So really need to get that done.
There's also something new around transparency at the Chamber of Deputies.
A new transparency register. Basically, if you or your organization wants to influence legislation, you need to register before any sort of organized contact with deputies.
Are there exemptions?
Yes. Some entities, like EU deputies, other state institutions, are exempt. The goal is clearly more transparency around lobbying.
Now, something potentially complex for businesses. New transfer pricing rules for current accounts.
Indeed. This is Circular LIR N Degrees 1641, and it's effective for 2025. Big change here. It moves away from those fixed interest rates that might have been accepted before.
So what's the new approach?
Strict application of the arm's length principle. For shareholder current accounts, using the VCL's consumer credit rate is okay as a simplification. But for intragroup current accounts, it's a case-by-case analysis. Robust documentation is mandatory.
And you have to declare it.
Explicitly declare these arrangements in your tax returns. So, yeah, definitely requires attention.
And just quickly on corporate governance CSRD.
The Corporate Sustainability Reporting Directive. It's in force. First reports are due in 2025, covering the 2024 financial year for companies in scope. A big expansion of sustainability reporting.
Let's turn to AML-CFT, anti-money laundering, countering the financing of terrorism, a new EU package.
Yes, a major overhaul, really. Directive EU 2024-1640, that's AMLD6, is a key part. Needs to be transposed into national law by July 10th, 2027.
What does it strengthen?
Reinforces a lot of areas. Internal policies, customer due diligence, TDD, reporting suspicious activity, record keeping, beneficial ownership transparency, and your own risk assessments. It's quite comprehensive.
And the big structural change is the new EU authority, AMLA.
Exactly. The EU Anti-Money Laundering Authority, expected to open its doors in Frankfurt Q1 2025. The executive board is being appointed now.
What will AMLA do?
It takes over the EBA's AML-CFT mandates by the end of 2025. For next year, AMLA will draft the detailed rules, the RTS, and guidelines. It'll also have direct supervisory powers over some high-risk firms and coordinate the National Financial Intelligence Units, the AFAUs.
And locally, the CSSF remains focused on AML-CFT.
Very much so. They've held conferences, like one for investment firms in March, and have others planned, like with the ABBL for banks. They're focusing on their supervisory findings, MLTF typologies, and explaining the new EU package.
Any specific risks highlighted?
They have flagged terrorist financing risks, pointing out Luxembourg's potential vulnerability as an international financial center. This echoes the 2023 FATF report, which recommended Luxembourg deepen its understanding of TF risks.
And the LPEA is also active in this space.
Yes, they published a useful template, an annual AML-CFT report of the RC aimed at RAFs and other unregulated AIFs, helps standardize reporting to the AED.
Okay, let's focus on the banking sector specifically now. DORA's impact is significant there too, presumably.
Absolutely. Banks have the same DORA obligations, and that extended May 31st deadline for the corrected register of information applies to them as well.
And instant payments, SEPA instant.
Right. New EU regulation 224886. If a bank offers standard SEPA credit transfers in euro, they now must also offer instant euro payments.
What else does that involve?
It includes requirements for verifying beneficiary, name IBAN, the confirmation of pay idea, and also harmonized ways to monitor financial sanctions. Luxembourg's implementing this via Bill N Degree 8460.
Which banks are deemed systemically important in Luxembourg?
The CSSF identified them in Regulation 2407. It's the Banque et Caisse d'Épargne de l'État, BIL, BGL, BNP Paribas, Clearstream Banking, and Société Générale Luxembourg. They're the OSIIs. Their capital buffer rates haven't changed.
Can you briefly outline the core regulatory framework for banks here?
Sure. Primarily overseen by the CSSF and the BCL, the central bank, under the Ministry of Finance. And of course, the ECB has a role within the single supervisory mechanism. Key laws are the 1993 law on the financial sector, the 1992 AML law, and the 2022 law on the BCL itself.
And they face specific capital and liquidity rules.
Definitely. Subject to CRD and CRR capital requirements, including buffers like the systemic risk buffer and liquidity rules like the LCR and NSFR. Also remember those MiCA circulars from April? Very relevant if banks are looking at crypto asset services.
What's the latest economic data telling us about the banking sector?
Well, recent BCL data for Febmarch showed consumer confidence dipped slightly, but credit institution balance sheets continued to grow. The EBA also has new rules tailoring resolution reporting based on bank size.
Okay, broadening out to the overall economic outlook for Luxembourg. Key indicators.
Well, annual inflation hit 1.7% in April, which, as we said, triggered that May 1st indexation.
Yeah.
State Tech forecasts 1.9% inflation for this year and next.
Unemployment.
Stable at 5.9% in January, but the actual number of job seekers was up year on year. And as mentioned, consumer confidence saw a small dip in March.
You mentioned potential tax reforms for 2025. Can you recap the main proposals?
Yeah, quite a few things proposed. A cut in corporate income tax, personal tax adjustments, indexing brackets, boosting credits for single parents, child support deductibility, minimum wage tax credit.
Also things for attracting talent and rewarding employees.
Exactly. A flat rate and patriot regime, incentives for young workers, an enhanced participative bonus scheme, a tax credit for cross-border worker overtime, and a subscription tax break for actively managed UCITS ETFs. Quite a package if it goes through.
And those new transfer pricing rules we discussed earlier definitely have economic implications.
Oh, for sure. Requiring that strict arm's length approach and better documentation for current accounts that will definitely impact how businesses structure intercompany finance and potentially their taxable base.
And the international picture, how does that play in?
Well, hosting the Council of Europe meeting puts Luxembourg visibly at the center of European policy, which can have positive knock-on effects. The fund industry is always sensitive to global shifts, like, say, U.S. trade policy, and underlying geopolitical instability is always a background factor for economic sentiment.
Right. Let's wrap up with some key administrative and tax points. Tax return deadline.
For 2024 income, the forms have been on myguichet.lu since early April. The filing deadline is December 31st, 2025. The ACD is also rolling out more pre-filled returns, which should help.
What about deadlines for non-residents and companies?
For assessed individuals and their business tax return for a given year N, the deadline is December 31st of year N+1, same for the annual adjustment deadline. And crucially, these deadlines are non-extendable.
And for cross-border workers, those teleworking days are key.
Absolutely critical to track. It's 34 days tolerance with Germany and Belarus, 29 days with France. Go over those, and you risk shifting taxing rights to your country of residence, so careful management is needed.
We covered the new transfer pricing circular. Any other quick admin updates?
Just that old age pensions went up 1.6% back on January 1st, 2025. And Guichet.lu continues to evolve, facilitating online procedures and even running surveys, like one on simplifying tax returns back in March. Keep an eye on key deadlines generally.
Okay, we have covered a huge amount of ground today, really highlighting the key regulatory, economic, and administrative currents impacting Luxembourg right now.
Yeah, and lots for you to consider. Think about that extended DORA deadline. What does it mean for your resilience planning? How does that MiCA implementation blitz change your crypto strategy, if any? And are your transfer pricing policies really ready for that stricter arm's length approach?
This has just been scratching the surface, of course.
Yeah.
We really encourage you to dive deeper into the specific regulations and guidelines we touched on that affect your specific situation. The official sources we draw from have all the granular detail.
And if you found this useful, please do hit that subscribe button. Luxembourg Intelligence News.